Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. Price analysis, in-depth technical insights on BTC, ETH, XRP, SOL, BNB, DOGE, ADA, Link, AVAX, and SUI. U.S. states paved the way for strategic Bitcoin reserves amid Trump's promised national initiative. Can new Bitcoin whales halt a descent below $90,000? A comprehensive technical analysis. Bitcoin traders forecast $400,000 BTC price target if three key catalysts align. XRP faces 30% decline risk if key $2.20 support breaks. Price analysis 2/12. In-depth technical insights on BTC, ETH, XRP, SOL, BNB, DOGE, ADA, Link, AVAX, and SUI. Analysis Bitcoin, BTC. Bitcoin, BTC, remains at a critical juncture as bulls and bears clash around the key support level of $95,000. Recently, BTC was seen trading at approximately $96,487, having been pushed close to $94,000 following a higher-than-expected consumer price index reading for January, a 0.5% rise month-over-month and 3% year-over-year, surpassing economist estimates of 0.3% and 2.9%. These figures have dampened hopes of an imminent rate cut by the U.S. Federal Reserve. However, Bitcoin's bulls responded by quickly nudging the price back above the $95,000 threshold, indicating resilient demand at lower levels. Bitcoin's price has been range-bound between $90,000 and $109,588 for several weeks. The downsloping 20-day exponential moving average, EMA, at around $98,441, combined with a negative relative strength index, RSI, currently lends a slight edge to the bears. If BTC closes below $94,000, the pair might test the crucial support around $90,000, with buyers expected to defend the $85,000 to $90,000 zone. Conversely, a decisive break and close above the moving averages could shift momentum to the bulls, potentially driving prices toward $102,500 and, subsequently, $106,500. Analysis Ether, ETH. Ether, ETH, is displaying signs of resilience as it attempts to form a higher low near $2,500. Trading at roughly $2,712, ETH is facing significant selling pressure at the critical breakdown level of $2,850. A sustained move below $2,500 would suggest that negative sentiment remains prevalent, possibly triggering a decline toward $2,350 and further down to $2,250. However, if the bulls manage to break and close above the $2,850 level, this could signal a reversal in sentiment, opening the door for a rally towards the 50-day simple moving average, SMA, at approximately $3,193, which is anticipated to present considerable resistance. Analysis XRP. XRP is currently trading around $2.45 and has been operating below its moving averages since early February. Despite this, a minor positive is that the bulls have managed to keep XRP above $2.26, creating a narrow trading range between $2.26 and $2.54. This tight range reflects the ongoing tug-of-war between bulls and bears. A breach below $2.26 would likely empower the bears, with the XRP USDT pair potentially falling to the solid support level of $1.90. On the other hand, if XRP breaks and closes above its moving averages, the bulls could gain control, paving the way for an up move towards $2.91, where selling pressure is expected to intensify. Analysis: Solana, SOL. Solana, SOL, trading near $195.25, has experienced a recovery from the $175 support level but has encountered strong selling pressure at the 20-day EMA of $208. The downsloping EMA and a negative RSI suggest that the bears currently control the market. Should sellers succeed in driving the price below the $187 support, the SOL USDT pair could potentially test the solid support at $175. Conversely, if buyers manage to push the price above the moving averages, SOL could see gains up to $220, suggesting the potential for a range-bound market between $175 and $260. Analysis: BNB. BNB is showing robust performance after a sharp recovery that saw it closing above its 20-day EMA of $635, with the current price around $708.39. The relatively flat 20-day EMA and an RSI positioned just above the midpoint imply that bearish pressure is waning. Buyers appear poised to push BNB above the 50-day SMA at $675, which could drive the pair higher towards $725. However, immediate support levels remain at $635 and then $596. A failure to hold these supports, particularly a break below $596, might see BNB decline further to around $557, where buying interest is likely to resurface. Analysis: Dogecoin, DOGE. Dogecoin, DOGE, is trading at approximately $0.2605 and has been operating within a descending channel pattern. Despite the bearish setup, bulls are expected to defend the key support level at 23 cents vigorously. The 20-day EMA, currently at 28 cents, represents a critical level where selling is anticipated. If Doge turns sharply down from this EMA, it could indicate strong bearish control, potentially pushing the Doge USDT pair down to 20 cents. Conversely, a decisive break and close above the 20-day EMA would suggest robust buying interest, potentially propelling the pair upward towards the 50-day SMA at about 32 cents, although significant resistance is likely to be encountered there. Analysis: Cardano, ADA. Cardano, ADA, is trading around $0.7767, with buyers actively attempting to push the price above the critical breakdown level of 80 cents. However, the bears are expected to remain tenacious at this level. A sustained effort by the bulls to keep ADA above 80 cents could lead to a breakout above the 20-day EMA at approximately 81 cents, opening the possibility for a rally toward the 50-day SMA at about 92 cents. Should ADA fail to maintain its position and instead break below 65 cents, the market could see a significant downturn, with the pair potentially falling to 50 cents. Analysis: Chainlink, Link. Chainlink, Link, is currently trading around $19.01, having been hovering below the $19.25 mark for several days. The failure of the bears to initiate further declines at lower levels suggests that selling momentum might be tapering off. For a bullish reversal, Link will need to push and sustain levels above its moving averages. However, a break and close below $17.44 could signal that the $19.25 level has now turned into a robust resistance, increasing the likelihood of a drop toward the February 3 panic low of $15.40. Analysis: Avalanche, AVAX. Avalanche, AVAX, is trading at roughly $25.82 and has been in a downtrend for several days. Bulls are currently attempting to arrest the decline at the support level of $22.35. On the upside, the 20-day EMA at $28.82 poses a significant barrier that buyers may find challenging to overcome. If AVAX turns down sharply from this EMA, bears could gain control, potentially driving the AVAX USDT pair down to test the $22.35 support, with further declines possibly reaching as low as $17.50. On the other hand, a break and close above the 20-day EMA would indicate bullish intent, with the pair having the potential to rise toward minor resistance at $30.59 and eventually target the 50-day SMA at around $34.70. Analysis: SUI, SUI. SUI, SUI, has been showing some resilience recently, trading near $3.57 after bouncing off the $2.86 support level. However, a long wick on the February 11 candlestick, particularly around the 20-day EMA at $3.55, signals that sellers are active. The bears are likely to push the SUI USDT pair down toward the solid support level of $2.86. Strong buying interest is expected at this level, as a break below $2.86 could open the door for further declines, potentially testing the $2.39 support. Conversely, if the bulls can sustain levels above the 20-day EMA, there may be an opportunity for SUI to rally towards the 50-day SMA at approximately $4.20, though significant resistance is anticipated there. U.S. states paved their way for strategic Bitcoin reserves amid Trump's promised national initiative. At least 16 U.S. states are spearheading efforts to create strategic Bitcoin reserves, following in the footsteps of a national vision first hinted at by President Trump. Nearly a third of the nation's states are venturing into this financial frontier, traditionally viewed as unthinkable, as they seek to incorporate Bitcoin and digital asset investments into their public fund management strategies. Legislation is currently under discussion in various states, with proposals that would permit state treasurers to allocate a portion of public funds, up to 10% in some cases, toward purchasing Bitcoin. In states such as Arizona and Utah, bills have already passed committee approval, signaling that a legislative vote could be imminent. These initiatives reflect a broader trend in which U.S. states are taking proactive steps to secure a digital asset reserve long before any potential federal government action materializes. In his first address to the sector on February 4, White House crypto czar David Sachs emphasized that exploring a potential national Bitcoin reserve is one of the first things we are going to look at as part of the administration's internal working group. This declaration came after President Trump signed an executive order creating a task force aimed at shaping U.S. digital asset policies, an act that sparked optimism among crypto advocates nationwide. Although some market participants expressed disappointment that Trump did not immediately begin accumulating a strategic Bitcoin reserve, state-level initiatives have quickly gained momentum. Proponents argue that a strategic Bitcoin reserve, SBR, would serve as a robust hedge against inflation and currency devaluation. Unlike fiat currencies, which central banks can print without restraint, Bitcoin's fixed supply offers a potential safeguard against the erosion of wealth that often accompanies rampant currency depreciation. This feature is particularly appealing as state and national economies grapple with the challenges of inflation and fiscal instability. The legislative push is not merely symbolic. Several states have already set the groundwork for purchasing Bitcoin. For instance, Oklahoma, New Hampshire, and Pennsylvania have introduced proposals that would allow state treasurers to allocate up to 10% of their public funds toward Bitcoin acquisitions over a defined period. Such measures could potentially trigger a domino effect, encouraging other states to follow suit. The proactive stance taken by these states underscores a significant shift in how governments view digital assets, not as speculative investments but as long-term stores of value that can provide stability in volatile economic climates. Amid these developments, market participants are closely monitoring the impact of these legislative efforts. Some analysts contend that actual government-led purchases, likely spearheaded by the Treasury, are necessary to satisfy market expectations and drive sustained upward momentum in Bitcoin's price. Eugene Epstein, head of trading and structured products North America at Moneycorp, commented on the matter in an interview, noting that without substantive state or national activity, the market is unlikely to see a significant price uplift. The push for strategic Bitcoin reserves is also fueled by the unprecedented support President Trump has shown for the digital asset industry. In early communications on social media platforms, prominent figures, including Eric Trump, have highlighted the favorable environment for Bitcoin investment, urging investors to just buy Bitcoin and hold. Such endorsements have reinforced the narrative that Bitcoin's role as a long-term asset is becoming increasingly recognized at the highest levels of government. Further bolstering the case for an SBR is the fact that the US is already the largest sovereign holder of Bitcoin, largely due to judicial seizures and law enforcement actions. Data from BitcoinTreasuries.net indicates that the US currently holds over 207,000 BTC, roughly 1% of the total 21 million supply. While initial state-led efforts are expected to focus on managing this existing stockpile, the prospect of augmenting it with newly acquired assets through dedicated state funds presents a transformative opportunity for the nation's financial strategy. Analysts and researchers have also compared the potential impact of the Bitcoin Act, a legislative package that could formalize these state-level initiatives, to the effect of exchange-traded funds, ETFs, on institutional adoption. Research by CoinShares earlier in the year suggested that such legislation could significantly enhance Bitcoin's credibility as an asset class and catalyze further institutional investment. This boost in confidence might offer a more profound and lasting impact on the crypto market than the introduction of ETFs, further paving the way for widespread adoption. The shift in lawmakers' mindset is evident, as growing support for digital asset reserve legislation suggests a rethinking of traditional investment strategies. No longer confined to the realm of speculative trading, Bitcoin is increasingly being viewed through the lens of a strategic asset that can provide long-term economic benefits. The momentum generated by states moving quickly to adopt these measures indicates a paradigm shift in public finance management, as digital assets assume a more central role in economic policy. States embracing this new approach are not only seeking to diversify their investment portfolios but are also aiming to signal their commitment to innovation and fiscal prudence. This legislative wave could potentially reshape the landscape of public asset management, leading to an era where digital currencies are integral to government reserves. While uncertainty remains regarding the ultimate outcome of these initiatives, the aggressive pursuit of a strategic Bitcoin reserve at the state level is a clear indication of the shifting priorities within U.S. financial governance. Can new Bitcoin whales halt a descent below $90,000? A comprehensive technical analysis. Bitcoin's price action continues to capture the attention of investors, as market participants closely monitor whether a potential sub-$90K correction can be stopped by the cohort of smart money Bitcoin whales. Recent on-chain data and market analyses suggest that if Bitcoin, BTC, faces further downside pressure, its new whale investors, with cost bases near critical support levels, could play a decisive role in stabilizing the market. Bitcoin has recently found a key support level as its price struggles to retest the $100,000 threshold. At around $96,516, BTC appears to be locked in a narrow trading range, a phenomenon attributed to macroeconomic uncertainties and geopolitical events that have tempered bullish momentum. Data sourced from Cointelegraph Markets Pro and TradingView indicate that, at the Wall Street Open, Bitcoin has been flatlining near the $96,000 mark, signaling cautious market sentiment among both retail and institutional investors. In a notable X, formerly Twitter, post on February 12, on-chain analytics contributor Axel Adler Jr. highlighted the emerging significance of a new class of Bitcoin whales. These investors, who have held their positions for up to 155 days, are believed to have an aggregate cost basis close to $89,200. Adler emphasized that these new whales are unlikely to sell at a loss should Bitcoin's price approach or drop below $90,000, identifying this level as a crucial support for the ongoing consolidation phase. According to Adler, large players who bought BTC at this price are unlikely to sell at a loss, underscoring the stabilizing potential of these long-term holders. The market is rife with discussions about seller exhaustion, a phenomenon indicating that selling pressure may be waning. European head of research at Bitwise, Andrei Dragos, explained that the price holding near $100,000 reflects a significant depletion of selling pressure, suggesting that a reversal could be on the horizon. Data reveals that the sell-side pressure has reached its highest intensity since the collapse of the Three Arrows Capital hedge fund in mid-2022. Crypto trader Kasabi further reinforced this viewpoint by noting that the exhaustion of sellers could signal the start of a market reversal. On-chain analytics from Glassnode have provided additional insights into the behavior of Bitcoin holders. According to Glassnode, most BTC sold at a loss has been by short-term holders, STHers, those who acquired Bitcoin within the last month. As of February 11, these STHers had realized losses totaling approximately $834 million. In stark contrast, investors holding Bitcoin for 1 to 6 months reported loss-making sales amounting to just $126.5 million. This disparity suggests that newer market entrants are more vulnerable to volatility and price fluctuations, while longer-term holders are better positioned to weather market corrections. Glassnode's analysis also introduces another key support level, pegging the aggregate cost basis of short-term holders at around $92,000. This level serves as a psychological and technical benchmark, reinforcing the notion that any significant breach below this price point could trigger increased selling pressure from the most recent entrants. The interplay between these critical support levels, $89 $200 from the new whale cohort and the $92,000 level from short-term holders, creates a layered safety net that may help to stabilize Bitcoin's price during periods of volatility. The broader technical picture for Bitcoin is marked by a prolonged consolidation within a defined trading range. Although the current price is hovering near $96,000, the market remains highly sensitive to external shocks, such as unexpected shifts in macroeconomic policies or geopolitical events. A sustained downturn, however, could test the resilience of this support structure, potentially triggering a deeper correction toward the $90,000 level. Should this occur, the behavior of these long-term whale investors, with their substantial positions and low-cost basis, will be critical. Their reluctance to sell at a loss could act as a formidable bulwark against further declines, providing a foundation for a potential rebound. Meanwhile, the technical indicators present a mixed outlook. On the one hand, the current price action and volume trends imply that Bitcoin's bulls are actively defending key support levels. On the other hand, the persistent sensitivity to market news and the cautious stance of many traders underscore the ongoing risk of a more pronounced downward move if critical support levels fail to hold. In the broader context of market dynamics, Bitcoin's resistance to a sustained decline below $90,000 could signal a maturation of the digital asset market, where long-term investors play a more significant role in dampening volatility. The interplay between technical resistance, macroeconomic influences, and the strategic positioning of new whale investors forms a complex tapestry that will likely dictate Bitcoin's price trajectory in the near term. As market participants await further developments, the current scenario underscores the importance of monitoring both on-chain metrics and traditional technical indicators. The behavior of these new whale investors, in particular, offers valuable insight into potential future price movements. Their collective actions, based on a cost basis near $89,200, may well determine whether Bitcoin can avoid a further slide below critical support levels and instead pave the way for a resurgence in price action. Bitcoin traders forecast $400,000 BTC price target if three key catalysts align. Analysts and traders are increasingly bullish on Bitcoin's potential, with some forecasting that the world's largest cryptocurrency could surge to $400,000 if certain pivotal events come to fruition. Recent market observations, combined with historical parallels to gold's rally, have led some experts to argue that Bitcoin could mirror gold's trajectory, reaching cycle tops in 2025 and beyond. This optimistic view is grounded in technical analysis, on-chain metrics, and the observed behavior of Bitcoin's price in relation to macroeconomic trends. Bitcoin has experienced a prolonged period of consolidation, trading in a narrow range between approximately $95,000 and $97,000. Despite this indecisiveness, many market participants remain confident in Bitcoin's long-term potential. One anonymous analyst, identified as APSC32, has drawn parallels between Bitcoin's performance and gold's recent run to an all-time high. Using a power law model normalized against gold's market capitalization, this analyst plotted Bitcoin's price on a logarithmic scale where each Bitcoin is measured in ounces of gold rather than dollars. According to this analysis, Bitcoin has historically traded within a predictable range relative to its power law support line. The analyst commented, even during the biggest bubbles, Bitcoin has never gone more than 5 years ahead of the trendline. Right now, we're near the 1 year ahead level, suggesting further upside. The potential for Bitcoin to reach a $400,000 price level is also linked to its 4-year market cycle. With the next price surge predicted as part of this cyclical behavior, traders are watching for indicators that suggest Bitcoin's current consolidation phase may be nearing an end. If Bitcoin continues to follow its historical cycle and mirrors the trajectory seen in the gold market, the cryptocurrency could see a dramatic increase in value. In December 2024, Blockware Solutions, a prominent crypto mining firm, outlined a similar price target range for Bitcoin in a report to Cointelegraph. While the firm noted a bearish scenario could see Bitcoin at around $150,000 and a base case around $225,000, it also emphasized that a combination of factors could propel Bitcoin's price to as high as $400,000. One of the key factors driving these bullish expectations is the possibility of a U.S. strategic Bitcoin reserve. If the federal government were to establish such a reserve, it could serve as a powerful signal of institutional confidence and create additional demand for the asset. Moreover, potential rate cuts by the Federal Reserve, combined with increased Bitcoin adoption by major corporations, are seen as additional catalysts that could significantly boost Bitcoin's price. These events, in tandem with technical signals from the market, are considered essential for triggering the kind of upward momentum needed to break out of the current sideways market structure. Another bullish indicator comes from Bitcoin's taker-buy-sell ratio, which has recently begun to show signs of a strong reversal. Cheyenne BTC, an anonymous market analyst, pointed out that the 14-day moving average of the taker-buy-sell ratio is now indicating increased buying pressure. Previously, when this metric dropped to around 0.96 in June 2024 and again in August 2023, Bitcoin experienced notable bullish pullbacks. Now, with the indicator climbing above the 1.0 mark, it suggests that buyers are regaining strength and could soon take control of the futures market. This resurgence in buying activity may well serve as the final push needed to break through the current consolidation phase, setting the stage for a broader upward move. The convergence of these technical and fundamental factors is viewed by many as a turning point for Bitcoin. The current market scenario, a period of relative stability following significant consolidation, could be the calm before a storm of bullish activity. Traders and analysts are keeping a close watch on key support levels, particularly the critical $90,000 range, which is seen as a major inflection point for Bitcoin's price dynamics. Should Bitcoin find robust support in this area, it could provide the necessary foundation for the bulls to push the price towards the higher targets indicated by both historical trends and the power law model. In addition to the influence of technical indicators, broader market sentiment appears to be shifting as well. The macroeconomic environment, marked by evolving fiscal policies and global economic uncertainties, is prompting investors to look for alternative stores of value. Bitcoin, with its fixed supply and decentralized nature, is increasingly being seen as a hedge against inflation and currency devaluation, a narrative that has driven demand among both retail and institutional investors. This sentiment, coupled with the ongoing digital transformation in global finance, underpins the belief that Bitcoin could reach unprecedented price levels if the market conditions are right. Furthermore, the analysis of Bitcoin's historical price movements relative to gold provides a compelling argument for its potential to achieve a $400,000 price target. Gold's recent surge to new heights has long been considered a benchmark for investor confidence in a stable store of value. By mapping Bitcoin's price on a logarithmic scale where it is measured in ounces of gold, analysts have found that Bitcoin often follows a similar pattern of growth, suggesting that the cryptocurrency could see a comparable percentage increase over time. This method of analysis reinforces the notion that if Bitcoin continues to adhere to its historical performance trends, a dramatic rise in value is not only possible but perhaps inevitable. The interplay of these factors, technical support levels, market cycles, macroeconomic policies, and historical parallels with gold, creates a complex yet optimistic picture for Bitcoin's future. Traders are now watching for the alignment of these key events, understanding that any significant deviation from these trends could either reinforce the bullish scenario or necessitate a reassessment of the current market outlook. With the eyes of the financial world fixed on Bitcoin, the possibility of reaching a $400,000 price target remains a subject of intense debate and speculation among market participants. XRP faces 30% decline risk if key $2.20 support breaks. XRP is under significant pressure as bearish indicators on its daily chart point to a potential decline of up to 30% if the crucial support level at $2.20 fails to hold. Recent market conditions, including a strong CPI data print, have further dampened hopes for an immediate recovery, with XRP trading sideways between $2.50 and $2.30. The altcoin, currently hovering around $2.46, has already slipped below $2.40, setting the stage for a more pronounced correction if the price falls under the critical $2.20 barrier. A detailed examination of XRP's daily chart reveals that its exponential moving average (EMA) bands have been signaling a bearish reversal. According to Dom, an XRP markets analyst, these EMA bands, specifically the 50-day and 100-day averages, have historically preceded substantial short-term corrections. Between 2017 and 2021, whenever XRP closed below these EMA levels, the altcoin experienced a minimum 30% drop, often marking the beginning of a short-term bear market or even a market top. This pattern has raised concerns that if XRP closes a daily candle below its $2.20 support, it could potentially slide to a range between $1.50 and $1.60 in the coming weeks. Despite these ominous technical signals, the analyst also notes that XRP continues to see steady spot inflows from key exchanges such as Coinbase, Bitstamp, and Bitfinex. However, trading activity on Binance has not shown significant momentum since February 7, highlighting a potential disparity between different trading venues. Dom pointed out on social media, "It's pretty spectacular how right when Binance spot market starts bidding, $XRP goes up. Binance runs the show when it comes to $XRP price moves." This observation underscores the role of liquidity on major exchanges in influencing short-term price dynamics. XRP has been consolidating since early February, with the current price action placing it in a kind of no man's land, trapped between a resistance level around $2.50 and support near $2.30. The altcoin's liquidity appears to be balanced at both the demand and supply zones, indicating that any significant breakout or breakdown could dictate its future trajectory. Over the past week, XRP has tested the $2.50 resistance level on 3 separate occasions. The optimal scenario for the altcoin would involve capturing demand zone liquidity at levels below $2.32, which might then allow it to move up toward the $2.50 level. Conversely, failure to hold the support at $2.20 could unleash a cascade of selling pressure. External factors are also playing a critical role in the current market sentiment. With the Consumer Price Index, CPI, data coming in higher than expected, inflationary pressures remain a key concern for investors. As a result, the Federal Reserve is unlikely to implement any interest rate cuts in the near term. The elevated CPI readings, which are the highest since June 2024, have contributed to a broader, risk-off environment in the crypto market, as investors remain cautious amid ongoing bearish pressure. In this context, XRP's technical setup becomes even more pivotal. The downward trend indicated by the EMA bands, coupled with the potential for a critical breakdown below $2.20, suggests that XRP could be facing a challenging period ahead. The historical correlation between XRP's price action and its EMA support levels has proven to be a reliable predictor of short-term corrections in past bull markets, reinforcing the notion that the current setup could lead to a substantial decline if bearish momentum continues. Analysts are closely monitoring the market, with many emphasizing that a failure to secure the $2.20 support level could be the catalyst for a deeper correction. The combination of technical resistance, macroeconomic factors, and uneven liquidity across major exchanges presents a complex environment for XRP traders. While some market participants are optimistic about potential rebounds if demand holds at key levels, others remain wary of the risks, noting that the technical indicators have historically forecasted significant downside moves for XRP. The overall sentiment in the crypto community reflects a mix of cautious optimism and concern. Many traders are eyeing the balance between supply and demand zones, which will likely be the decisive factor in determining whether XRP can stabilize or if it will continue its slide. The interplay between short-term trading dynamics on exchanges and broader macroeconomic pressures, such as high CPI readings and the associated risk-off sentiment, further complicates the picture. The market is waiting to see whether XRP can defend its support levels or if the bearish signals will lead to a significant correction, potentially taking the altcoin down to the $1.50 to $1.60 range. Overall, XRP's current market scenario is a critical juncture, with technical indicators pointing to a potential 30% drop and external factors, such as CPI data contributing to an overall bearish sentiment. XRP traders and investors are bracing for a possible downturn. The outcome of this critical test will likely influence not only XRP's near-term trajectory but also its position within the broader crypto market, as market participants look to gauge the strength of its support levels and the potential for a rebound or further decline.